Hello everybody, welcome back. Things are looking unbelievable. They're looking amazing. I can't believe, in fact, what I'm seeing. And in fact, yesterday I was saying don't FOMO, which is obviously the right thing to do. You should never FOMO. You should never buy anything that's sort of like going straight up like that. It's kind of crazy. You should have allocated beforehand, and I suppose from a trading perspective, it was risky because you never knew which direction the votes were going to go in. So, a bit of a wild card. But for those of us who trusted the charts generally over the longer term, I suppose we're quite pleased with ourselves. Our portfolios, at least from an altcoin perspective, has started to move up now. And we've started to see what could be a breakout on the total 2. And this is, well, it's not the very first time we've seen this kind of scenario unfold, breaking outside of this trend line. But what we have got this time is a break above the 200 simple moving average, which is a death cross. We're rejected from it here and here. Yesterday we closed above it. This morning we've already retested it. So it does look a bit more convincing now that a breakout is real for altcoins. And we'll have a look at Ethereum in a minute as well, because Ethereum is the main driver of this. This has always been my main problem. Ethereum has to be the dominant altcoin to break the total 2, to give conviction to other altcoins to continue to move up and also go bullish. Because, if you remember the Patreon, or you just look at your own charts anyway, you would have recognised that most altcoins are absolutely not in a bullish situation. They are not breaking out. They're not trending up. They're for the most part, most altcoins look like wrecked city. And if anything, they're in a period of accumulation, which I think we might consider that to have been broken at the moment. So yeah, just reflecting on the fact that we had a closure last night above the 200 simple, a support above the 200 simple this morning, and continuation for the most part, and a couple of drives of hidden bullish divergence. My apologies. Right then, so Ethereum, what are you up to then? So there's your death cross on simples, there's your death cross on exponentials, and there's, I suppose, some front run retests. Now, we've been talking about how this area down here between 2,150 and all the way up to here on 3,000 is all one giant accumulation zone. And again, as an educated guess that's what we're looking at, an accumulation zone. We can go to a higher term time frame like a weekly, and we are seeing some momentum shifting up on the MACD. And if it is doing this, and we do get a positive cross, this would look good long term. Also, if we close this area on a weekly above 2,700, we would be above the 20 weekly, which again would shift the odds in favour of further upside based on simple Bollinger Band strategy. If you want to know more, there's links on the Patreon for a tutorial on that. Also, you could look back in hindsight here, couldn't you? Again, Captain Hindsight is always the best trade. We've got the 200 simple, which is all part of a giant golden cross that took place all the way back in 2023. You've got support, all with a trending up moving average. And again, the last time we hit it was 2,370. Each one of these could have led to a move like this, or a move that takes us to a new all-time high. Or each one of them could have been the last, and you break down from it, and the next level would have been down here at 2,100 once again. But at the moment, it is trending up. Now, this isn't bullish divergence because we haven't made lower lows. This is actually an uptrending level of support. Again, same with this. This is just all movement with price action. This is why Ethereum has been so boring. And again, no positive cross on the histogram down here either. So, it makes you feel like you have to either buy Ethereum through a different viewpoint, because the chart situation, despite being technically bullish still on the weekly with those supports down there that we saw on the 200 simple, for the most part it's just been sitting down here for a long period of time. And again, we'll assume accumulation area will break with closures above the 200 simple on the daily, which is 3,000 for Ethereum, and then once that's done, hopefully get a retest, move up, golden crosses, and then you should be looking at something similar to this. So if you imagine this period down here being the equivalent of this here, you break out, you retest, and then you get your golden crosses and you trend up, and then you make a nice little run. So I think we could be looking at something like that. The operative word being could. I want everybody to recognize what it is that's going on here. It's called the Trump pump. Things are moving up because Trump is now in. Markets, or most markets, are excited because he vows to deregulate, and if there's any If there's any industry out there that's suffering from over-regulation or, I suppose, idiotic regulation or just ridiculous lawsuits for the sake of just trying to have a money grab, it would be the crypto industry, I would imagine. I've always found that the SEC, targeting all these really decent blockchains with utility, Atom, Algorand, XRP, Matic, you name it, they're all in the crosshairs of the SEC, and it seems to me that they just want money. Because if you really wanted to do some cryptocurrencies or some developers who really have done rug pulls, you'd go for them. But the reason they don't go for them is because there's no money to be had. There's plenty of money to be had in the top caps, which is the ones that they've targeted. So it is what it is. Always seemed a bit crooked to me. Right. So that's the deal with Ethereum, and that's the deal with the total too. It does, to me, look like my overall analysis since last year is correct, and I know I keep bringing it up. And it's not to blow my own trumpet, because nothing is confirmed. But this has always been my expectation. The consolidation throughout the summer, breakout at some point towards the end of this year. It looks like this is the first time we could be considering that to happen, and then continuation up. So, I've had this overlaid, and we talk about it at least a few times every week. And this is my general expectation, and it would appear that, well, lo and behold, it would appear that it is happening. I've said over and over and over and over again, especially over the last couple of weeks, that this period of the market should be considered the easy part. So whatever you've got in your portfolio, whatever you've accumulated in your portfolio, shouldn't be overtraded. You should just sit and allow for it to rise now, and everything should be okay. Really, should be okay. If you believe in what I believe, which is that we have a nice fractal here that isn't so much about, we're going to hit this amount. It's more about the projection of time, where we should be reaching some kind of rough peak around this time next year, give or take. And really, we're overdue for a breakout. Today's the first time we see any evidence of a kind of a breakout, and so maybe we can just sit back, watch and wait and see if this has got legs. The first major target on the total 2 is going to be 1.8 trillion. I'll probably see a rejection from there, higher low, breakout, continuation over the next, like I say, the next 10 to 12 months. So I'm pleased with what I see. It sort of, I suppose, goes to help me maybe confirm my overall bias, which was that this was going to happen roughly around this time. And again, this is the easy part of the trade, really. We should have allocated enough to allow for our portfolios just to start creeping up over time. And as much as I advise against FOMOing, because you would be FOMOing if you're buying these big green candles, even on the simple Bollinger Band tutorial on the Patreon, I always say, if something's outside of a Bollinger Band, you're very likely to get sucked back into it. You'll have to wait to get an opportunity to go in again. And you don't know at what point it's going to get sucked back in to revisit moving averages, but it will at some point. Just try to make sure it doesn't happen to you buying I'm buying Ethereum, it's rallying up, FOMO outside the Bollinger Band. 95% of price action takes place inside the band, so just relax, okay, and wait. So it does look good, I have to say. It goes hand in hand with what I've been saying for a 12-month period now, since the last Altseason that we caught back in October last year. Now it looks like we are on we could even be seeing the breakout take place already. So Altseason, if you want to call it that, or crypto rallies, continuation, whatever you want to brand it at. You can brand it whichever way you want. I know that it's very triggering to say Altseason to some people. Some people are very excited about it when you say it. Some people vomit all over their lap when I say it. So I'm just going to say, a breakout on the total 2, which is all altcoins and everything excluding Bitcoin appears to be breaking out. Much will be confirmed Monday morning when we have the weekly candle body close. If it closes like this, brilliant. Same thing with Ethereum. The dailies are looking good. The weekly just needs to close above this 21 and the 20, and it gives a much better chance of continuing on. Last time we did that, and I'll leave it with you here, was around here. So we had a breakout, and that was it. And the last breakout took place with a candle body close of 1800. And yeah, rallied on beyond 100% from there. Now, I'm not saying Ethereum is the best trade you'll ever make. What I am saying is it guides the path. It might shift the Bitcoin dominance, but it'll certainly shift the total too, which is what you can see at the moment. And with these two together performing in a particular way, that is alt season, alt rally, catch up, whatever you want to call it. A period in the market where altcoins have rallies, decent gains. You know, we take it as it is. You know, so that will be that, with the money flow index still at this relatively hot read where we've seen alt seasons in the past. There's your hot read over here, big reaction, overheated read over here, long-term reaction, and then we had these reads over here which also led to this reaction. Even this one over here led to that reaction. So we might be seeing something like this: move down, move up, move down. It doesn't really matter. I'm not going to tell you exactly because I don't know how the dominance chart will react, but we are overdue for an alt rally. And that's based on time and also volume on the dominance chart. So it looks to me like we're getting ready for a period of fun, a period of relaxing gains to start flooding into our portfolio. And whether or not you want to close positions when you've made some money, that's up to you. But for me, there is an aspect of time that's related to this market. And I'm quite happy to hold my portfolio throughout this year into next year. And I will be looking to get out when things look particularly overheated. And at the moment, they look, if anything, like this is day one of a healthy market. So there's a lot more time to pass before I feel like my assets have reached maturity. So yeah, again, relaxing. Just sit back, chill, watch, and allow for your portfolio hopefully to increase in value if you've allocated appropriately. Right, I'll leave it with you there. If you've made it to the end of the video, congratulations. Please let me know in the comments, and I could do with some engagement. Other than that, yeah, hope you have a nice day. Take it easy.